Good morning, members, and wish you a happy and prosperous New Year 2022. Now, the topic for the day is recent changes and related burning issues under GST, and the speaker for the day is CA Tarun Arora, who is the renowned speaker in GST from Gurgaon, Delhi. Now, we are starting the institute motto, so I'm sharing my screen.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Yeah. So just a small announcement. Today we lost one of our very senior member, Mr. M.K. Sudeka. So I just request the members for a 30-minute silence for him. Om Shanti.
Om Shanti.
Now I request our Deputy Convener, CA JS Thakkar, to formally introduce today's speaker. Over to you, JS ji.
Thank you, Krishna sir, our convener. So on behalf of JP Nagar CP Study Circle, I am very privileged and proud to introduce one of my best and today's the learned speaker, CA Tarun Arora sir. And why I'm saying this, because I have learned so many things from him, and today I got the opportunity to introduce him in our own study circle, JP Nagar CP Study Circle of the WS of ICAI. So regarding to brief him, I must say he is the fellow member of the ICAI and a commerce graduate from the Delhi University, a student of GST and researching on the subject since 2015. He is a regular speaker at the various forums, such as on the certification course on the GST conducted by the ICAI, CP seminars conducted by the various branches of the ICAI, and the study circles and the associations to discuss the various aspects of the GST. He consults the organizations on the latest and the tricky aspects of the GST, and regularly represents the clients before the revenue departments at the various level. So this is the brief introduction about him. But before we start our session, I must say, when we approach Tarun Bhai to take the session on the GST, without taking a minute, without asking for some more time, he just said, I'm ready to take this session. So we can see the way he was also allowed to join us on our JP Nagar CP Study Circle on a virtual platform. So we thank you very much, Tarun Bhai, for accepting these invitations, and we welcome you on our virtual platform on the GST. So thank you, Arun Bhai. Now the dais is yours.
Thank you, Jay sir. Thank you, Krishna sir. Thank you, Atulji. And I thank the entire study circle to give me this opportunity to share my thoughts on the topic recent amendments under GST. One thing that GST has taught us is something what life teaches us: change. The only thing that is constant in life is the change, and same is the status of GST. You can expect one thing from GST, that it will change whenever we move on to 2020-23. Since 2020-21, we have seen so many changes, and entering into 2022 also we have many changes. Now, without wasting any further time, I will be starting my deliberation. I am covering only the important changes that are relevant on a day-to-day practice. Plus, out of those changes also, I will be focusing more on 3 specific changes. So my time will be devoted accordingly. Just give me a second to share my screen. So first of all, I have divided my entire presentation in 2 parts. Part 1 is amendments effective 1st of January 2022. And in the second part, we will be discussing 2 amendments. One is yet to be notified, or actually both of them are yet to be notified, but will be having a huge impact in our practical practices. Starting on with the first part and the first issue, it is in relation to amendment, I should rather say insertion of a new condition to claim input tax credit. Prior to this amendment, we had to satisfy 4 conditions. We had to satisfy 4 conditions to claim the credit. And those 4 conditions were having a valid tax invoice. 2, I must have received the goods and services, the credit of which I wish to avail. 3, I should pay the taxes. The supplier actually should pay the taxes. And lastly, I should file my own return. So there were 4 conditions that were to be satisfied in order to claim a credit: a valid tax invoice, receipt of goods or services, tax payment, and lastly, filing of return. Then in October 2019, the government introduced Rule 36 Sub Rule 4 and added a condition in rule, not in the act, not in the substantial law, but in the delegated law, that is the rules, that you are also required to make sure that the credits you are claiming are actually reported by the supplier. So Rule 36(4) was introduced way back in October 2019. After introduction of Rule 36(4), every one of us knew that it is actually challenged before various high courts. And one of the grounds to challenge Rule 36(4) was that there is no substantive provision in the GST law. The Act does not provide you such a power that there should be some matching with GSTR1, or there should be a form like GSTR2A or 2B through which you have to match these credits. Therefore, to remove that ambiguity, to remove that conflict, the government has now introduced Section 16(2)AA, and which adds a condition that you can claim credit only and only if the supplier has reported the supplier. So this condition is added. This condition is added with effect from 1st of January 2022. And now you are eligible to claim the credit of those invoices which are reported. So earlier there were 4 conditions, and now the 5th condition is that the invoices must also be reported by the supplier in the corresponding GSTR1 or the IFA. With this, there was also a need to actually delegate to scientifically devise Rule 36(4) and to state which form, GSTR2A or 2B, which form is precisely to be used. So the government simultaneously amended Rule 36(4) and stated that now it will not be 120% or 110% or 105%. It will be the amount which is actually furnished. So there is no additional amount which is available with us. Plus, the base form will also be GSTR2B. So amount reported by the supplier in the corresponding GSTR2B, only those credits will be eligible to be, I can claim only those credits in my GSTR3B. So the concept of 2A, the conflict between which amount under which ledger has to be claimed, GSTR2A has to be taken or GSTR2B has to be taken. With effect from 1st January 2022, the conflict has been resolved. Now it is GSTR2B which is to be used, and we are eligible to claim credit of only those amounts which are reflected in 2B. because now we have a substantive provision in the law. Whether that substantive provision per se is correct or not, we will be discussing in the later part of this stage. I have not yet concluded the topic, but I'm just bringing in one aspect. What is the status of credit of import of goods? We all know that even the credits of import of goods are now reflecting in GST at 2B. Assuming I imported goods worth rupees 10 lakh rupees in a particular month, say December 2020, and those credits are not reflected in my GST at 2B, but I have a valid bill of entry in which I have paid taxes of say 1.8 lakh rupees. What is the status of those credits? Am I still eligible to claim those credits or not? Sir, for this, we should again go back to section 16(2)AA, what the amendment exactly is. Now I am reading this amendment verbatim. The details of the invoice or debit note. So section 16(2)AA is applicable only for two set of documents. One is the invoice and the second one is debit note. It is not applicable on bill of entries. It is not applicable on any other document, for example, ISG document. It is applicable only on invoice and debit note. Referred to in clause A. In clause A, it says that you must have possession of a valid tax-paying document. So out of that, in Rule 36, we can see there are 4 to 5 types of documents which are required to claim the credit. For bill of for import of goods, it is bill of entry. For ISD, it is the document generated by the input service distributor. It could be a debit note, it could be a credit note, it could be a self-invoice in case of RCM. So there are various types of documents that are provided in the law. Out of those various set of documents, only 2 documents are identified. And now it says that has been furnished by the supplier in the statement of outward supplies. And those are also required to be submitted by the supplier in his statement of outward supplier. And that could either be GSTR1 or it could be IFL. So only those credits which are required to be passed on, which are required to be submitted through GSTR1 or IFL, only those documents are covered. Similarly, when we go to the amended Rule 36(4), it says no input tax credit shall be availed by a registered person in respect of invoices or debit notes, the details of which are required to be submitted under subsection 1 of 37(1). 37(1) is GSTR1 and IFL. 37(1) is GSTR1 and IFL. So only those credits which are required to travel through GSTR1 or IFF, only those are restricted under Rule 36(4) and section 16(2)AA. So there is no problem if the credits of import of goods is not reflected in 2B. In last 2 months, I have seen various cases wherein the credits of import of goods were not reflecting in GSTR 2B. And the basic issue that was coming before us was whether we are eligible to claim these credits or not. Even prior to this amendment, there was no restriction. And even after amendment of section 16(2), that is introduction of subclause AA and overhauling of Rule 36(4), the credit of import of goods, ISD, self-invoice, these credits remains as it is. There is no need for them to come or to be reflected in GSTR 2B for me to claim those credits. Any issues, sir? Sorry. Moving ahead. Now, after 16(2)AA and 36(4), there are few basic issues that we need to understand. The first issue is to understand why we need a provision like 16(2)AA and Rule 36, or why we are burdening the industry, why we are complicating the entire process. So we need to understand what is the reason, what is the thought process of the government to bring in such a change. Then we also need to understand whether after 1st January, can I claim, it should be GSTR 2B and not GSTR 2A. In the second bullet, it should be 2B, not 2A. After 1st January, can a taxpayer claim amount more than what is reflected in 2B? Assuming my total amount reflected in 2B was 100 rupees, can I claim 110, 120, 130, or the software will restrict me that you cannot claim more than 100 rupees? We will discuss this aspect also. And lastly, and most importantly, what is the impact of judgment like DY Bethel, Arise India, and Sri Rangnathar Wells? In all these cases, they have said that mismatch is not the responsibility of the recipient. I will be discussing on these three cases also. So now let us start with the first bullet. What is the need to bring section 16 to AA and rule 36(4)? Because until and unless we understand what is going in the back of the department, we will never understand, we will never give relevance. See, definitely they must have a thought process, and we may agree to disagree that this thought process is per se wrong. But first of all, we need to understand what is the thought process. Since the inception of GST law, the government always intended that we want an automated return filing system. We want an automated return filing system. There should be one start button. There should be one physical intervention. That earlier it was proposed to be GSTR1. When the initial law was prepared or it was being drafted, the government said, yes, this is the best law. The suppliers will submit GSTR1. Automatically, the credits will be reflected in GSTR2A. The recipients will claim the credits through GSTR2A. So there was very minimal intervention. GSTR1 was the starting point based on which the recipient will finalize their input tax credit. And based on 1 and 2, our return was to be finalized and completed and submitted. And there was only one push button, that was GSTR1. But due to some issues in GSTR2, the entire process of GSTR1, 2, and 3 could never be introduced. But the will of the department never changed. The expectation of the department never changed. And they said the officers behind this law, they were very aggressive, and they are still very aggressive, that automation, the thought, the basic intent of GST, which is automation, will not be taken back. But now they have changed the thought process. The thought process is not the starting point. Instead of GST, they are saying that the starting point in near future will be e-invoice. Sooner or later, everyone will be mandated to issue e-invoice. As soon as you issue an invoice, it will be reflected in your GSTR1. Based on that, it will be reflected in the GSTR2A or 2B of the corresponding party. And based on GSTR2B, you will file your GSTR3B based on 1 and 2B. So now in near future, the starting point will be e-invoice, based on which my GSTR1 will be auto-populated. Based on my GSTR1, the GSTR2B of my recipients will be auto-populated. And now we have two forms, 1 and 2B, which are almost auto-populated based on e-invoice. We will file an auto-populated GSTR3B. And now to achieve this entire auto-population process, what was required? If we would have left GSTR2A as the base form, then there could not have been any stagnant figure. On 11th, it was say 100 rupees. On 12th, it was 120. On 13th, it was 140. On 14th, it was 170. On 16th, it came back to 150. On 17th, it again got 180. So because it was a very dynamic form, GSTR2A, every time a supplier filed his return, the figures in GSTR2A were changing. So the government said that the objective is automation. We want minimal human intervention. So we will have to restrict to something. And they restricted it to the credits credits reflected through returns filed up to the cutoff date of GSTR1 and IFF. So they introduced form GSTR2B. That it will be a fixed form. The credit will come automatically. You have filed your GSTR1, GSTR2B, the credit will come automatically. Your 3B will be auto-populated based on 1 and 2B, and you just pay your taxes and move out. There, you don't need to put more time during the entire filing process. And yes, during this automation process, the government they actually don't forget, but every time you bring in an amendment, definitely there are some losers and some gainers. And in this, the losers basically become those persons whose credits are not reflected properly. But the objective is automation. Objective is minimal human intervention. So the first bullet that we were discussing was need for bringing section 16 to AA and rule 36(4). It was just to synchronize the form, just to make sure that the entire process is automated. Now, the second issue that needs to be discussed is after introduction of 16(2) and Rule 36, obviously these rules will again be challenged. It is not one of the people or the bigger taxpayers will not accept it without any litigation. After 1st January 2022, now we all know that GSTR 3B is an auto-populated form based on my 1 and GSTR 2B. The figures of my output and input are auto-populated. Earlier, I also had a relaxation that GSTR 2B, I could claim amount above 5% or up to 5% of GSTR 2B. So if amount reflected in 2B was 100, I could claim credits in up to 105 rupees. Now, what is the way forward? What will be the status? To understand this, we must understand, during this entire automation process, one thing the government cannot do is restricting the credits, restricting the figures amount. They can auto-populate my GSTR 3B, my return form, with figures from GSTR 1 and GSTR 2B. They can auto-populate. They can give me a data that is based on some other documents which are already filed and submitted, but they cannot restrict me to alter the figures which are auto-populated. They may also give a red flag that your change is more than 10%, 5%, 20%, whatever the criteria is, but they cannot restrict me to alter the figures. And why I am saying so? Assuming in January 2022, I purchased certain goods, say again 10 lakh rupees, credit was 1.8 lakh rupees. The bill was issued on 31st of January 2022. The goods were actually received by me on 3rd of February 2022. So invoice was issued on 31st January. The supplier reported correctly in GSTR 1. The credit of 1.8 was also reflected in my GSTR 2B. But whether I am eligible to claim that 1.8 lakh rupees in the month of January? Obviously no, because the condition section 16(2)(b) says that you are eligible to claim the credits only and only when you have received the goods or received the services. I am receiving the goods in February 2022. So I will claim those credit in 2022. So in January, my 2B is 1.8 lakh rupees. My claim is 0. Credit is 1.8. I have claimed 0. In the next month, assuming my credit is 0, but I will be claiming 1.8 lakh rupees because I have not claimed in the previous month. And that will be because the amount in GSTR 2B or February is 0. I am claiming 1.8 lakh rupees. The government cannot restrict up to 5%, 10%, 20%. The government can definitely, the software can definitely say that you are claiming more than 20%, 50%, 80%. That is only a red flag. That is just to identify that you are increasing the figure substantially. Please see if it is a clerical mistake or not. But when the facts are very relevant, then definitely you can claim it beyond the amount prescribed or reflected in GSTR 2B. Another example is I am required to reverse my credits if I have not paid within 180 days. So I reversed the credit way back in 2018, 19, 20, before introduction of 16(2) and 36(4). But now I am paying those creditors. Am I not eligible to claim the credits? Definitely we are eligible to claim the credits. And that amount will not even be reflected in GSTR 2B. So should I not claim the credit? Yes, we will claim the credits. And once we claim the credit, one thing is also very true that we will get a notice from the department in the form of ASMT 10. And then we will have to reply, give a proper reply that these credits pertain to previous year, which were reversed under Rule 37 or as the case may be. So the entire thing that I want to pass on as of now is that even though section 16(2) is in place, I am not restricted to go beyond GSTR 2B. If the facts of the case are very relevant, for example, goods in transit, Rule 37 or XYZ key, then definitely I can go beyond Rule 36(4), that is beyond GSTR 2B while filing my GST return. Now coming on to the impact of judgments like DY Bethel, Arise India. I will concentrate on DY Bethel and Arise India. DY Bethel is the GST judgment, judgment in the case of GST regime. Arise India Limited is the judgment in the case of earlier regime, that is the VAT regime. So I am starting with Arise India Limited, what this judgment said. Arise India Limited judgment was the order of Delhi High Court, which was challenged before the Supreme High Court, and the Supreme High Court rejected. So basically what the essence has to be understood is from the Delhi High Court judgment, because the Supreme Court dismissed the PLI of the department. Arise India Limited judgment was a very good judgment, and the basic objective of the entire judgment was you cannot expect the recipient to step into the shoes of the supplier. You cannot, at that time the words were purchaser and seller, you cannot expect the purchaser to step into the shoes of seller and do his compliance. How can you expect he will go and file the returns of the seller? So this was the basic objective of Arise India Limited judgment. So they said, if the transaction is genuine, there is no material on record that proves that the transaction was bogus. Even the supplier has paid the taxes, and merely because he has not reported it correctly in his GSTR1, which is now the form. Earlier it was state specific what was the form. Even though they have not reflected in the corresponding statement of outward supply, you cannot deny the credits of recipient or the purchaser. But DY Bethel Enterprises, the judgment is much more advanced. And now this judgment is actually, I would rather suggest everyone to actually go through this DY Bethel Enterprises. This judgment said, actually what was the case, that I was the recipient. I was forced to deposit the taxes because my suppliers have not filed the corresponding credits in GSTR1. They have not reported through GSTR1. So I was required, I was being forced to deposit the taxes. I went before the High Court and said, sir. So during the entire process, when they were demanding me the tax amount, I have many times requested the authorities to bring the supplier into the picture. I have paid tax amount to that particular supplier. Why you are not bringing the supplier? Why you are not summoning the supplier? Yes, there is a mismatch. Yes, there is a mismatch. I am not denying there is a mismatch. But I have paid tax amount to that supplier. And why I have paid the tax amount? Because you gave him the authority. You gave him the authority to collect the taxes. You gave him the GST registration so that he can issue a tax invoice and collect taxes from me. Just because you gave him the power and I paid the taxes to him, and now you are not questioning him, you are coming to me and asking me to deposit the taxes. And this aspect of the plea was very well drafted by Madras High Court, and this very categorically said, when the recipient is demanding, bring in the supplier, why you are not bringing in the supplier? So now DY Bethel said that if you have to recover any amount, the first person will be the supplier to whom the department has granted the registration and power to collect the taxes. Only and only after the supplier position is exhausted, the department has controlled the supplier, has taken the recovery, and it is found that the transaction is guilty, it is a bogus transaction, then you can come back to the recipient. Otherwise, your tax collection is complete if the supplier has paid the taxes. And to my understanding, whether it is 16(2)AA rule 36(4) or the government introduces a very different form of 16(2)AA to restrict the credit, these judgments will always play a role. Because these judgments, you cannot introduce a law which cannot be practically fulfilled. You cannot expect a seller, a recipient to comply the provisions for a supplier. I cannot file the returns of my supplier. So these are basic aspects. We also, in all these judgments, they also use the provisions of Constitution of India, free trade and business. You are not allowing me to do my business. You are asking me to follow up with the supplier, whether he has filed his return, whether he has reflected or not. So considering these judgments, and that of lately these judgments are coming in favor of the taxpayer, definitely 16(2)AA will be challenged. So I will divide my observation, my classification in two parts. If there is a genuine credit, you should definitely claim and fight for it. depending on the quantum, and how we have to fight I will discuss in the last part of this presentation, because there is a linked provision that I will be taking up at that particular point in time. Then if there are bogus credits, then I will advise that it is better to pay off, because sooner or later you will have to reverse those credit. And again, how we have to reverse those credit, this is also very important. And again, I will be discussing these at the last part, because these are basically practical, how to improve our practice I will be discussing, and what are the two provisions that can actually we can add value to our clients, that I will be taking up in the last part of the session. With this, we complete the first discussion, the first topic of our discussion, that is 16(2) AA and Rule 36(4). Going forward, it will be only 16(2) AA. The other small issue that comes before me was whether it will be applicable from GSTR 3B of December month or January month. To my understanding, since the provisions are amended with effect from 1st of January 2022, all invoices received post 1st of January, all invoice dated 1st of January 2022 should be covered within this ambit. So for December, this restriction shall not apply. This is my understanding of the entire law. Moving on to the second issue of our discussion. The second issue is changes in tax rate. The major tax rate change has come in works contract. In works contract also, the tax rate has been changed only for specific contract, not the entire works contract. So before starting this, we must understand there are 5 different types of government or government related organization. One is the central government. Then is the state government or the union territory government. Central government, state government, UT government is also included in the state government. Then we have local authorities. Central government, state government, local authority. Then we have government authorities and government entities. So these are the 5 categories in which the government organization and government is being divided for GST purposes. Generally, central government, state government, and local authority, these 3 are always kept at same power, at same level. Government authority and entity at some places are merged with these 3, and in some places they were distinguished that this particular relevant entity is not applicable to government entity and government authority. From 1st January 2022, they have now removed the benefit of 12% rate, which was applicable earlier to all the government contracts. Now it has been restricted only to the first 3 categories, that is the central government, state government, and local authorities. And what are those contracts? In case it is a contract for historical monument, archaeological site, or a canal, dam, or water treatment facility, water supply facility. So now if I'm executing this contract, I am a supplier, I'm executing it for central government, the rate is 12%. And if I'm executing this contract for a government authority, the rate will be 18%. Similarly, so there were 2 basic serial number 33 and serial number 36, which have been amended. In 36, we have predominantly those buildings which were not for commerce and industry, or it was an educational or a clinical institution kind of a thing. So 33 and 36 were 2 basic contracts in which the earlier rate was 12%. Now the government said the rate will be 18% from 1st of January. And the corresponding works contract, earlier it was, if I am the contractor, I am charging at the rate of 12%, then my subcontractor will also charge at the rate of 12%. Since my rate has now been changed to 18%, my subcontractor will also charge at the rate of 18%. So the rate has been changed from 12 to 18. Again, sir, what is very important is that not all the contracts have been changed from 12 to 18. Contracts of road are still in the 12% category, whether you give it to government or you give it to government authority. So only in 2 cases, they have increased the rate from 12 to 18. And in 1 case from 5 to applicable rate, depending upon what is the classification, it will go. It was in relation to earthworks. So earlier, we have almost 12 to 15 types of works contract that have been given in the notification. Out of those 12 to 15 types of works contract, only in 3 categories they have reduced the rate, or they have increased the rate from 12 to 18 or 5 to applicable rate. In all other cases, there is no change. They have also made similar adjustment in the exemption notification also, wherein it has been categorically stated that this benefit of exemption will not apply to if the supplies are given to government authority or government entity. So what I will advise is that we should see whether our client is issuing any invoice to any government authority, irrespective of the fact whether it is government or not. My first question to my client is whether you are doing any business with any of the government or government authority or PSU, etc. Yes, then we have to check what exactly is the nature of my recipient, whether he is central government, state government, local authority, government entity. Central government, state government, local authority. These 3 terms are defined in the Central Sales Tax or CGST Act, Central Goods and Service Tax Act. Government authority and government entity, the terms are defined in the 11/2017 rate notification. So if I have to understand what exactly is a central government, state government, or a local authority, I will go to section 2 of the Central Goods and Service Tax Act. And if I have to understand the meaning of government authority and government entity, then I will go to notification 11/2017. So the important aspect is that not all changes, not all works contract rate have changed from 12 to 18. It is only for government authority and entity, and that too for only 3 serial numbers. Moving ahead, another important thing that needs to be understood when there is a change in tax rate. Because there is a change in tax rate, we have to understand, because these are generally works contracts, are generally long-term contracts. So it could be possible that it is some of the work has already been done. I have received some advances. I have already issued the invoice. There could be various permutation and combination. So how will I actually treat this entire change in rate of tax? For this, we should understand the government has given a specific provision in time of supply for change in effective rate of tax. So from 1st January, the rate is increasing from 12 to 18. Now, how will I apply the tax rates with effect from 1st of January 2022 on the projects which are already in the process, projects in which I have already received the advances, or various permutation and combinations could be there. So we have to identify 3 aspects: date of invoice, amount received, services supplied. Works contract is service, so we have to see services supplied, date of invoice, and date of payment. If out of the 3 categories, that is invoice, date of payment, date of invoice, 2 or more lie pre-31st December 2021, then my tax rate will be 12%. And if 2 or more lie after 1st January 2022, then my tax rate will be 18%, and I may have to issue a debit note. For example, I had received an advance and I have also supplied the service. Then my tax rate will be 12% even if I have not issued the invoice. Similarly, I have received the advance, I have issued the invoice, but I have not yet provided the services. Again, my rate will be 12% and it will not be 18%. So 2 out of 3, if they lie in the pre-change rate, then the previous rate will apply. And if it lies in the new rate regime, then I will have to apply the new rate. Accordingly, we will have to see which rate will be applicable from 1st of January 2022. Then we had certain amendments for textile goods, which were withdrawn on 31st of December after the council meeting. So we are ignoring these aspects, and the status quo, which was pre the notification, 5% and 12% as the case may be, those are still as it is and there is no change. However, the rate of footwears have been changed. Now we have, earlier we had 2 classifications: below 1,000 5%, above 1,000 18%. The rate of 5% has now been increased to 12%. The category or the classification still remains same: Below 1,000, it will be 12%. Above 1,000, it will be 18%. And this is already effective 1st of January 2022. Then the government has now focused more on Aadhaar authentication. The government is increasing the scope of Aadhaar authentication. And now, with effect from 1st January 2022, they have brought in two major things. One is application for revocation of cancellation of registration. That has to be mandatorily approved or verified through an Aadhaar OTP verified UVC or OTP, whatever we call it. Secondly, the refund application should also be verified through an Aadhaar OTP. And refund application have been categorized in two aspects. One is under Rule 89 and one is under Rule 96. One is with payment of taxes and the other one is without payment of taxes. So in all the cases of refunds, we have to have an Aadhaar authentication. Similarly, if I have to file my application for revocation of cancellation of registration, I'm again required to cancel. I'm again required to verify it through my Aadhaar OTP. Another important aspect is blocking of GST return. And now this is again a provision to make sure the automation process is not hampered. At the same time, also ensuring the compliance is up to date. Pre-amendment, the provision said that if you have not filed GSTR 3B of the previous 2 months, then you were not eligible to claim the credits. If you have not filed credits or GSTR 3B of the previous 2 months, then you were not eligible to claim the credits. But now, with effect from 1st of January 2022, I am very sorry. From 1st of January 2022, if I have not filed my GSTR 3B of even 1 month, which is due, then I am not eligible to file my GSTR 1 of the succeeding month. In simple words, what I am trying to say is that my GSTR 1 of December was due on 11th. I have filed GSTR 1 on 11th. My GSTR 1 of February is due on 11th of February, 11th of March. Now, when I am filing my GSTR 1 of February, the software will check whether you have filed your GSTR 1 of January or not, or GSTR 3B of January or not. If you have not filed your GSTR 3B of January, then you will not be eligible to file GSTR 1 of February. It means if you have filed one, you are mandatorily required to file 3B. And if both these are not filed, you cannot file GSTR 1 or 3B of the succeeding month. So it is very important for us to understand that it is now become very important that 1 and 3B should be filed simultaneously. If 1 and 3B of any month are not filed, earlier it was 1, if 1 is not filed, then succeeding 1 cannot be filed. If 3B of 1 month is not filed, succeeding GSTR 3B cannot be filed. But they were not interlinked. But now the government is saying that if 1 and 3B both are not filed, you cannot proceed ahead with GSTR 1 or 3B of the next month. So they want that GSTR 1 and 3B should be filed, and only after then we will give you an option to file GSTR 1 of the succeeding month. Otherwise, you will never get an opportunity to file that month. And it is now applicable with effect from 1st of January 2022. One has to be very particular that GSTR 1 and 3B are filed simultaneously. Otherwise, it will be a big problem because you cannot file succeeding. They have already linked this provision with blocking of e-way bills. Now they have even blocked GSTR 1 that you cannot pass on the credits. This is to make sure that the entire process, the entire automation, because if you do not file GSTR 1, then GSTR 2B credits will not be reflected. So to mandate, to ensure that you file your GSTR 1, they have also linked it with GSTR 3B. File your 1, pay the taxes. File your 1, pay the taxes. Your recipient will get credit only when both these activities are completed. So they have actually strictened the provision only to ensure better compliance. Another important aspect or change which has already commenced from 1st of January is that supply of services, specifically restaurant services through e-commerce operator. Now, if I am an e-commerce operator like Swiggy, Zomato, then I am liable to pay the taxes for all the supply of food material, that is the restaurant services, through my portal. I call it a special levy. Why I call it a special levy? We have three kinds of levy in section 9. Section 9 is the charging section. Generally, the normal provision says that supplier will sell the goods, collect his payment, collect taxes for the government and pay to the government. That is normal levy, forward charge. Supplier will collect the taxes and pay to the government. Then we have reverse charge. Recipient will pay the taxes directly to the government. Recipient will pay the taxes directly to the government. And lastly, a special levy. Neither the supplier nor the recipient. Now, neither the restaurant owner nor the customer, both. The supplier is the restaurant, the recipient is the customer. Neither the supplier nor the recipient, both of them are not liable to pay the taxes, but the facilitator will be liable to pay the taxes, just like in the case of Ola, Uber, or other travel website like Trivago, etc., Make My Trip, etc., wherein the special levy is applicable and it is the facilitator who are required to discharge the taxes on the overall supply. Even in case of urban clap kind of a scenario, it is not the person who comes to work at your home is required to pay the taxes, or you are required to pay the taxes. It is the urban clap which is required to pay the taxes. So you have to understand that special levy, again, there is an objective, there is a thought process to bring in special levy. Reverse charge and special levy are always introduced whenever the government feels that it is easy to control, or it is better that the taxes are collected at a single point in time. For example, insurance agent. If we keep forward charge, if the department keeps forward charge on insurance agent, what will be the plethora of returns that are required to be filed? Assuming there are 10 insurance companies, and on an average, every insurance company, assuming, has 1 lakh insurance agent. So technically, there will be 10 lakh registered person. Out of 10 lakh, say 5 lakhs will not be covered in the category of 20 lakh rupees, but at least 5 lakhs will be covered. So the government will now have to review 5 lakh returns in order to process a single insurance commission agent, or what is the GST liability on those things. In order to reduce their burden from 5 lakh to just 10 companies, they introduce reverse charge. Now they will focus only on 10 companies. And now instead of 5 lakh, they will be able to get revenue on 10 lakh insurance agents. So getting into reverse charge, they reduce their burden from 5 lakh returns to only 10 returns. Similarly, GTA, it is expected that it is very difficult to recover the amount from GTA. So they introduce the concept that the recipient will pay the taxes, because we cannot run after the good transport agency, but the recipient we can always identify and we can concur. We cannot run after the GTA. So either it is they cannot run after a particular group of person, or they want to reduce their burden. So insurance agent, banking facilitator, all are these kind of a thing. Ola, Uber, there are n number of drivers registered, there are n number of passenger registered. How to bring them into the system? So they said neither the drivers nor the customers are required. We need Ola and Uber, just one facilitator, and we have encompass say 12 lakh drivers or 3 lakh drivers, whatever the case may be, to increase this ambit and to reduce the burden. Because now the concept of cloud kitchen is very much coming into picture, wherein they do not deal with the third party. They just have a kitchen, they have registered on Swiggy, Zomato, so they just supply to that particular platform. So the government said that instead of running after each and every small unit, Swiggy and Zomato, it is better we just go to them, ask them to pay the taxes through their platform. It will be easy for us to collect the taxes. It will be easy for us to manage. So these special levies are introduced when the government want to reduce its burden. Reverse charge and special levy, the objective is to reduce the burden and improve the tax collection. So now I am a restaurant, I am registered on Zomato, Swiggy, etc. So if I am supplying through that Swiggy, Zomato, I am not required to pay any taxes. It is the Swiggy or Zomato that will pay the taxes. But if there is a client which comes directly to my restaurant eats food over here, then definitely I am liable to pay the tax from that particular aspect. So I will pay taxes when I am dealing without any facilitator, without any intermediary, without any e-commerce operator, then I will pay the taxes. And if I have any e-commerce operator looped in, then it will be the e-commerce operator who will pay the taxes and not me. So it is already implemented, and the government has also clarified that there will be no restriction in ECOs in utilizing, there will be no restriction in ITC of the ECO. They just have to pay that amount in cash, whatever they are discharging in special levy. Then another important change was in e-way bills. Now, this is actually not a change. It is actually removal of the mistake in the law that was already existing in the law. Earlier, the provision used to say that you are required to pay if I am transporting my good from place A to place B, and during that transit, it was not covered with a valid tax invoice or a proper e-way bill, then I am required to pay penal consequences. I am required to discharge penal consequences of section 129. What was happening was, my penal consequences were tax plus some penalty. What was the penalty amount? I will discuss later. The basic thing was that I was required to pay some tax and some penalty. Assuming I was required to pay 18 rupees, so the government said you are also required to pay 18 rupees as tax. So the government was expecting a total total amount collection of 36 rupees. The government was expecting that I will be collecting 36 rupees if there is a wrong transportation of goods from place A to place B. But what was actually happening? When my goods were stopped due to some non-compliance, I used to pay the taxes, I used to pay the penalty, I used to pay 36 rupees. But then I used to go and file my GSTR 3B and 1 and saying that 18 rupees, so I have already paid at the time of my detention of goods. So 36 penalty I have also paid. So I will not pay tax again, because it was at the time of section 129, you have collected tax from me. You have collected tax from me. And a transaction can be charged to tax only once. I have transported this goods to say Mr. X. I have sold this goods to Mr. X. How many times tax can be collected? Only once. You have already collected under section 129. You cannot collect under section 39, or that is at the time of GSTR 3. Or am I audible now?
Yes, yes.
So penalty in e-way bills were earlier I was paying 18 rupees as tax and 18 rupees as penalty. So the government was not getting the 36 tax that they were envisaging, that we will be getting 36 rupees as our collection over and above the tax amount. So they removed that conflict, they removed the mistake, and now have said that the taxpayer will now be required to pay 200% of the tax amount as penalty. It is not the tax that you are paying. Now you are paying again 36 rupees only. You are paying 36 only, but now it is in the nature of penalty. And again, you will have to pay the taxes at the filing of GSTR 1 and 3B, as the case may be. So the government has just changed the words from tax. It has now used the word tax amount. It has not changed the overall quantum also. It has, the quantum is also the same. It is only the nature that is changing, and now you will have to shed extra because you will be required to pay penalty amount. Another important change in e-way bill, which I have not incorporated in my presentation, is that earlier the entire process of detention and collection of taxes and issue of show cause notice was being governed through circular in which MOV 01 to MOV 1112 were being incorporated. Now the government has also introduced those which were the law which was introduced through circular has now been incorporated in the act and the rules, because there is no change. It is just that they have borrowed the circular and have now incorporated the provision in the act and rule. Practically there is no change and it will go as it was originally doing. The only issue is that it cannot now be challenged. Earlier it could have been challenged that circular is not binding on the taxpayers, it is only binding on the tax authority. But to improve that conflict, they have now incorporated this into the GST law as well. Another important change is in section 75. Though it is a very important change, but to my understanding, it was always the case. But nevertheless, because if we have a high court interpreting the provision in a specific manner, definitely other people can also interpret it. The issue is, what is self-assessed tax liability? What is self-assessed tax liability? So self-assessed tax liability is the tax liability that is admitted by the taxpayer. If I have admitted that my total tax liability is 100 rupees, that is my self-assessed liability. And what will be the self-assessed liability in GSTR1? What I have reported in GSTR1. And what is my GSTR liability in 3B? What I have reported in 3B. But the law prior to this amendment used to say that self-assessed liability means liability disclosed in section 39. That is liability disclosed in GSTR 3B. So if I have reported 1 lakh rupees liability in 1, 50,000 liability in GSTR 3B, my self-assessed liability was only 50,000 rupees. And for the difference, for the variance of GSTR 1 and 3B, 50,000 rupees, the department cannot automatically get the amount. They cannot directly say that you yourself have said that your supplies are 1 lakh rupees. You are required to pay tax of 1 lakh. You have only paid 50,000 rupees. I need not go through the entire process of section 73, 74 demands and recovery directly, because you have yourself accepted 1 lakh rupees as liability and have paid 50,000 rupees. Pay the balance amount to us, or we will directly go to the recovery provisions to recover the amount. So now they have amended the provision of section 75 and have stated that it will also include the liability under section 37, that is liability generated through my GSTR1. So prior to this amendment, the High Court said that you will have to follow the process of section 73 and 74. That is, you will first have to issue the show cause notice, ask the supplier that there is a variance in GSTR 1 and 3B and why this amount should not be collected. Now the department, after amending this section, is not required to issue the show cause notice under section 73. They can directly ask you a simple question that you have declared liability of X rupees in 1. You have reported less amount in 3B. Why we should not have the recovery provision? And they might directly invoke the recovery provision also, because it is now a self-assessed liability. You have yourself accepted. Obviously, there should be a principle of natural justice has to be followed. So there should be one notice before actual recovery. So that notice should be responded accordingly, so that there is no problem going forward. Moving ahead. The last major change that is applicable from 1st of January 2022 is the changes in the HSN code. There are more than 351 amendments in the current HSN coding system. And these amendments were introduced by way of Finance Act 2021, but which were to be implemented from 1st of January 2022. Again, sir, I cannot go into each and every classification which is altered during this entire process. But what is important for us is to understand that the change covers almost all the chapters of HSN. Because 351 amendments are it is not necessary that the entire HSN has changed. In some cases, the explanations have changed. Some cases explanation have been introduced, some cases it has been deleted. There are some classification changes also. In total, there are 351 changes. So one has to go through all the changes, especially the manufacturers and importers, because they are the ones who will start As an exporter and importer, I have to submit my HSN at the time of filing of shipping bill or the bill of entry. As a manufacturer, I am the starting point to send my goods to the other party. In these cases, it becomes amply important for these kind of taxpayers to first identify whether their HSN has changed or not. And if yes, whether they have correctly reporting it from 1st of January 2020. Now the issue arises how to get these, what are the exact changes, how to understand this. And then we can refer to two things. One is the fourth schedule of Finance Act 2021. Fourth schedule of Finance Act 2021, which has been notified, contains the exact amendment which are introduced in the customs tariff. Or we can use the latest HSN issue, HSN classification by the customs policy wing, which is available on the CBIC website under the tab customs. So either you go through the Finance Act 2021 or you use the custom updated HSN classification mechanism. Either of the two can be used depending upon how we are well versed with the relevant HSN coding mechanism. But it is very important because the entire process, the entire chain will be impacted if as an importer, exporter, or as a manufacturer, I am unable to correctly classify my goods. That means you are bringing the entire chain at a particular risk, especially in cases where there is a change in tax rate. Corresponding amendments have also been introduced on 29 December by way of a rate notification, wherein the amendments in custom tariff, the HSN change in the custom tariffs have also been incorporated in the GST rate notification. Again, it is only parallel notification that has been issued for the GST purposes. So this is a change which actually I would always say that HSN is the area where most of the professional does not engage themselves. But if you are not engaging yourself, you are taking at risk the client as well as his parties related to that particular client, because they are dependent. More or less every trader is dependent on the invoice that he has received, and he is blindly dependent that if my manufacturer has charged say HSN 1, 2, 3, 4, I will be charging 1, 2, 3, 4. So whenever we deal with a manufacturer, it becomes very important for us to guide him that this is the correct classification for your product. Moving ahead. So these were the changes which were implemented from 1st of January 2020. Then we have two changes that are proposed that will come in future, but will have a very good impact on the practical life of GST. And the first is recovery of interest on credits availed, wrong credits availed, but not utilized, or even if utilized. So the issue before GST Council was, I have claimed a credit of 100 rupees, but actually the credit was only 10 rupees. Actually the credit was only rupees 10. 100 I have claimed by mistake due to a clerical mistake. Instead of 10, I typed 100 rupees and I have claimed 100 rupees. I realized the mistake, and in the next month I have reversed the credit. In next month I have reversed the credit. Then whether I am liable to pay any interest amount or not. The department was demanding the amount, but as a taxpayer, we used to always say that we have never utilized that amount. Yes, there was a mistake. We have rectified the mistake in the subsequent returns. So why should we pay the taxes? So the council also accepted the plea and stated that if you have not availed and utilized, no interest will be paid. If you have only availed but not utilized the credit amount, no interest will be payable. And the starting point of this juncture was again Mansarovar Hotels Private Limited in the case of Madras High Court. Madras High Court has recently given very good judgments. One of these judgments is again Mansarovar. We earlier saw DY Bethel Enterprises, wherein they said that you cannot go directly to the recipient. You will have to first go to the supplier. So Madras High Court is giving very favorable judgment in the favor of taxpayer. Now with this entire issue, the issue that precisely dealt was availed and utilized. In the pre-GST regime, we always had the concept of availed and utilization, which was missing under GST, which has now been reintroduced, that no interest is payable if you have only availed the ITC but not utilized. Similarly, if you have utilized the amount, then also the interest rate will be 18% and not 24%. We also have a conflict whether if the credits are not reflecting or this and that, whether the rate of 24% will apply or not. So as of now, we only are required to pay 18% and not 24%. And this amendment will be done retrospectively. This amendment will be done retrospectively. Now I am going back to the extract of the press release and I'm reading it verbatim for everyone because I will be using this discussion and the various aspects. I'm reading the words. In this spirit, spirit is the word that I am stressing upon. In this spirit of earlier council decision, that interest is to be charged only in respect of net cash liability. Section 50, subsection 3 of the CGST Act to be amended retrospectively with effect on 1st 7/17. So they have carried forward the spirit. And what is the spirit? That interest is to be charged only in respect of net cash liability. So the spirit, the expectation, the unanimous decision of the council is that we will charge interest only on the net cash liability. Otherwise, we will not charge any interest. This is my understanding. Though they have categorically stated that they will amend section 50, subsection 3, and there they will categorically write ineligible ITC availed and utilized, no interest. Only if it is, interest availed and utilized, then interest, otherwise no interest. And it will be a retrospective amendment. Now, my issue before everyone is, I am taking a small example. Assuming it is the month of September 2021, my total output as per books is 1,000 rupees. But wrongfully in GSTR 3B, I have disclosed 100 rupees. I have disclosed a lesser amount in 3B by 900 rupees. My input is 1,200 rupees. I have claimed the entire input, that is 1,200 rupees. Now the issue is, when I am correcting this amount in October 2021, when I'm adjusting, I have filed my GSTR 3B of September with the amount of rupees 100, my output liability of 100. The issue is, when I am filing my GSTR 3B of October month and I am paying this 900 rupees, I am paying this 900 rupees through credits of September month only, then am I required to pay interest on this 900 rupees or not? So for that, we must again go through the provisions of section 50. And now I am reading only the proviso. I am reading the proviso of section 50, subsection 1, provided that interest on tax payable, so my tax payable is 1,000 rupees, interest on tax payable in respect of supplies made during a tax period, that is September month, in respect of supplies made during a tax period, that is September, and declared in the return for the said period after the due date in accordance with the provision of section 39, except where such sum this by electronic cash ledger. I am reading the last word, by debiting the electronic cash ledger. So what they are saying is, you are required to pay interest on tax payable, and the tax payable will be only limited to the amount paid through cash ledger. But what is the important word? That liability should be discharged in the same month. So what they are trying to say, if my due date for September was 20th of October and I file it by 25th of October, then for 5 days this proviso is applicable. But if I am doing it in the month of October, November, December, January, February, then per se this proviso is not applicable and I am required to pay interest on 900 rupees because this proviso is not applicable. This proviso is applicable. I am again reading the red portion. Supplies made during the tax period, supplies made during September 2021 and declared in the return of September 21. So the benefit of limited interest is applicable when the supplies are made and reported in the same month. But if supplies are made in month X and are reported in month X plus 2, 3, 4, 5, then this provision is not applicable and I am required to pay the interest. So what should a taxpayer now do? So to my understanding and what we are actually doing it in our practice is that we are moving ahead with the concept of net cash liability. If I am discharging these tax amount with the credit available on that particular date, I was required to discharge this 900 rupees in September 2021. If I had sufficient credit of 900 rupees from September 21 till the date of payment, then I am not required to pay any interest. This is our understanding. Again, sir, it will be open to interpretation. The department will go otherwise. But my basis, earlier it was our internal thought process, our internal discussion, but now we also have a support from this amendment which was introduced or which will be introduced going forward. And why I am stressing upon is, again, the spirit, the council is now very stringent, or not stringent, but they expect that the interest will be applicable only when there is net cash liability. Otherwise, we are not liable to pay any, otherwise the taxpayer is not required to pay any interest. In this case, I was required to pay 900 rupees. I had sufficient credit lying with you. I would have paid it. Just because of a clerical mistake, I'm not required to pay the interest. This is my understanding. And why I advise my client not to pay the interest amount? Because my interest figure is now freezed. Assuming I reported it 3 months late. This 900 was reported instead of September 2021. I reported it in the month of December 2021. So my amount is 900 rupees. Nobody can alter this amount. My delay is 3 months. Nobody can alter this date. My rate of tax is 18%. Nobody can alter this date. So 900 into 3 by 12 into 18%, whatever the amount is, say 20, 50, whatever the amount is. My interest amount is now freeze. It cannot increase. I have not paid it. I will be assessed. I will fight for it. The probability of me winning and losing is 50-50. Assuming it, though I feel it is very, the probability of winning will be higher. But assuming it is 50-50. So I have gained time. After 2 years, 3 years, if I am depositing 100 rupees and 100 rupees I am depositing today, which is more valuable? The value of money depreciates over time. This 100 rupees, you can advise your client, sir, please make a FD, fixed deposit of this 100 rupees because you are required to pay. And the differential amount, interest you are earning, because you are not required to pay anything to the government after 2 years or 2.5 years. So to my understanding, deferring of interest amount can also bring in revenue profits or cash inflow benefits to your client. Again, sir, you have to see that it should not be a material amount. It should not impact the overall true and fair view of your taxpayer. If the interest amount is nominal, you can definitely consider it that it is not recorded in the books of account. But in this case, you can also say that to my understanding, interest was never payable because it originated 2 years later. My liability created 2 years after, so it is not a prior period income also or prior period expense. So it will be allowed in that particular year also. So deferment of interest, payment of interest is also in your favor and it is not against you. So you will have to understand the law. You will have to understand the law to use it in your favor. Now, again, coming back to this amendment. How I can use this amendment? One, we have already discussed that interest, because there is no interest. I can use, definitely place something with this. What should be that? Assuming I purchased, I am renovating my office, or I am a builder, I am constructing a mall. So there is a judgment of Odisha High Court in case of safari retreats, which says that if you are constructing a mall, after constructing the mall, you will rent out the property and generate revenue and pay the taxes to the government. Then as a construction, then the credits relating to construction will be allowed to you as credit, though the matter is pending before the Supreme Court. The department has filed a PLI and it is pending before the SLP or PLI, whatever the case is. I am not a law student. So it is pending before the Supreme Court. Now, because it is pending before the Supreme Court, I have two options. Supreme Court can issue an order in favor of the taxpayer or against the taxpayer. I know my time is limited. If I have to claim the credits, I have to claim it up to September of the specified year. So for example, 21-22, I have to claim it by September 2022. And I'm even sure I will not get the Supreme Court judgment before September 2022. What should I do? I will claim the credits. I will advise my client, claim the credits. Basis Odisha High Court. But don't utilize them. But don't utilize them. Let it stand in your credit ledger. Let it stand in your credit ledger. Because I am not utilizing it, the amount is lying in my credit ledger. What will happen? Have I done any wrong in GST Act? The earlier wrong was I was required to pay interest when I have claimed extra amount. But now the press release says that you have only availed, you have not utilized, no interest is payable. My statutory auditors will ask me a question, why you are claiming these credits? Sir, I am claiming these credits on the basis of Odisha High Court judgment, which says that if I am constructing a mall, I am eligible to claim the credits. After the judgment, we will decide finally whether the credit is to be taken or not. Finally, eventually, there will be a Supreme Court judgment. They will say the credit is eligible or they will say the credit is not eligible. Depending upon the outcome of the Supreme Court, I will decide my flow. But definitely, if my credit comes, if the judgment comes in, say, September 2024, I cannot go back and claim the credits because they were capped by time under section 16 subsection 4. So what I am trying to say is that wherever the taxpayer feels that these credits are disputed, sir, mark my word, these are disputed, these credits are litigated, claim the credits. And then we will fight it. We will not utilize them. We will fight for those credits. And eventually, if it comes in my favor, it is very good. It is very good because we have claimed in time and now the government has also accepted, the department has also accepted the credit is eligible. But if it goes against, then I will reverse the amount, claim it as expenditure because it has crystallized in that particular year. Interest I am not required to pay. I am losing nothing. So I am risking. I am taking the advantage of this press release. I am claiming the credits. But again, sir, in one of my discussions, it was a face-to-face discussion. One of the persons said, so then we should also claim the credits of motor vehicles. In future, maybe we don't have any authority coming into play. We don't have any cases that are lined up because the case is very small. It's a proprietary concern of turnover of 80 lakh rupees. I should claim the credit. And if there is no audit, no investigation, I will keep it. I will not utilize it up to the date of issue of show cause notice under section 73. I will utilize it afterwards. Sir, I always say that you have to play with the rule only when you have something to fight for. Motor vehicle is clean and clear case, the credit is not eligible. For a proprietorship, you may take a risk. But as a private limited company where we are the statutory auditors also, how can we allow when the law is very clear, there is no ambiguity, you cannot claim the credit, you cannot claim the credit. I will have a rider in my statutory audit report if you claim the credits of motor vehicle. But if there is an issue which is open-ended, credit of lift, credit of repair and maintenance, credit of CSR, credit of staff welfare, etc. There can be n number of things which are not per se. Section 17(5) definitely say that the credit of food and beverages are not allowed. Indoor and outdoor catering are not allowed. But it does not say staff welfare. There could be certain expenditures of staff welfare which can actually be claimed. Earlier, we were not inclined to ask our client to claim the credits. Though we were open that it could be a 50-50 case, we could actually win the case or we could actually lose the case. But now we only advise our client, claim the credit, do not utilize. But the only problem with this is that when I claim a particular amount, and it is under IGST Act, then by law, I am mandated to first utilize IGST. Then I am mandated by law to first utilize IGST and then claim C and S. So I cannot keep my IGST as it is. After utilizing IGST, I can defer C and S. So it will depend on the facts of the case. If you have 100% cash payment, then it is very good. If you can absorb that we are ready to pay through the cash amount and our credits are not very substantial, so we are ready to pay through cash, then there is no issue. Or you have so much accumulated credit lined up that these credits which we are claiming will never be utilized because my output for the next 2 years is 1 crore rupees. And I already have a credit of say 3 crore rupees. Then I definitely know that 2 crores plus any additional amount will never be utilized. So I can always say that it is never utilized. So depending on the facts of the case, we will decide what we should advise our client. But again, the important thing is that if you have availed and not utilized, you are getting your client a chance to claim the credit. And that chance can be 1 CR, 2 CR, 5 CR, 10 CR, depending on the particular facts of the case. But only and only when we know, we can advise our client that this is the way ahead. Maybe for a 1 crore dealer, if I'm getting him say 1 lakh rupees as credit, he will be happily giving me fees of rupees 1 lakh rupees. Otherwise, it is very difficult for a 1 crore rupee client to give me 1 lakh rupee fee. So until and unless I give him value addition, I give him cash inflows, he will not give me cash inflows. So it is a give and take relationship. Definitely you have to use your professional skills, but how to use this practically is also very important. So again, my advice is wherever you feel that there is some credit which can be disputed, which can be litigated, which is open-ended, go and claim the credit, but do not utilize them. Don't utilize them, fight for those credits, and then you can see what is the outcome. Section 16(2) AA Rule 36(4) says that the credit will not be eligible if they are not reflected in GSTR 2 with effect from 1st January 2022. There are many credits which are not reflected till September 2022. There are many credits of 21-22 which are not reflected till September 2022. What should I do? I should not claim the credits. We have a practice in our office. In September month, we will claim all the credits which are not reflected. We will claim the credits and then we will fight for it. In September 2022, we will claim all the credits of 21-22 which are not reflected. We will claim those credits. And now we are also advising our client not to utilize it. Even in September 21, because this press release was issued in mid of September. So we advise our client in October that claim the credits, but don't utilize it. We will have a very good chance going forward because we have DY Bethel Enterprises, we have the press release. So there are various factors which are originating. So again, even after introduction of 16(2) AA and Rule 36(4), not on a month-to-month basis, we will claim those credits. Because see, I don't want to invite litigation also, but I don't want my clients to lose also. So we will move it till September. We will make sure all the credits are reflected by September. If those are not reflected even at that stage, and those are material amount, we will go and claim it in the month of September 2022. We will not utilize it. We will fight for those credits. And if we win the credits, then it is very easy for us. And if we lose the credits, obviously losing means we will be traveling till Supreme Court in many of the cases. It is not me who will be traveling. It will be n number of taxpayers because the credit amount will be very huge in many cases. So many taxpayers will travel to Supreme Court. So we have a time of say 5 years, 10 years to claim those credits. Why I should make them time barred by section 16(4)? If I have claimed, I can fight for them. If I have not claimed, the matter is already closed. You have already lost with your client. The amount is not eligible for him in the near future. Moving ahead. Another important change was in section 77. Section 77 of the CGST Act and corresponding section 19 of the IGST Act, they deal with a situation wherein I am a taxpayer. I was required to pay C plus S on a particular transaction, but wrongfully I paid IGST. For a vice versa situation, I was required to pay IGST, but I paid C and S. Then the provisions of section 77 states that if you have paid the wrong taxes, paid the taxes under the wrong head, then you pay the taxes under the correct head, claim the refund of the wrong taxes, and you are not required to pay any interest. I'm repeating again. I was required to pay C plus S. I paid IGST. The law says pay C and S, claim refund of IGST, and no interest is payable. But during this entire process, there were two unresolved issues. What is the exact process? This is not governed through section 54. How should I claim the refunds, etc.? And what is the time limit by which I can actually claim these credits, or by which I can claim these refunds amount? It could be possible that the departmental authority identifies after 5 years that this was the wrong tax that I have paid. Whether I am eligible to claim the refunds after 2 years or after 5 years or not, because section 54 says 2 years from the date of payment. So section 77, these two issues, time limit and process, have now been revoked. Now it says that 2 years shall be calculated from the date of payment of correct taxes. So I was required to pay C and S, I paid IGST. From the date I pay C and S, the correct taxes 2 years from the date of that payment, or 23rd September 2023, whichever is later. And why 23rd September 2023? It was the date when this clarification was actually issued by way of a notification in rule, by amendment in rule. So now September 2023, if you have paid taxes, say in September 2018, if I have paid taxes in September 18, I paid wrong taxes, I made the correct payment in September 18. So the 2 years are September 20, it is already time barred. So they said 2 years from the date of correct payment, or 2 years from the date we are bringing in this clarification, this amendment, whichever is later will be the date by which you can claim the credit, by which you are eligible to claim the refund amount. And the process will be normal process, that is RFD 01. There is no change in this entire process. So these were the changes that I thought we need to discuss. And with this, I close my session. And now I will be happy to take the question and answer session if we have any.
So participants can ask the question, they can unmute themselves. In chat box.
I am reading, sir, I am reading the question issue.
Yes.
The first question that is in the question box is 16(2) AA applicable from January 21 return to be filed in February 21 or December return. I have already discussed. This provision is introduced from 1st of January. So it should apply on all the invoices issued on or after 1st January. So to my understanding, it will apply from returns filed in the month of February pertaining to January 2021. The second issue is the party under quarterly filing, GSTR 2B credit will reflect after quarterly filing. In the intervening period, services / goods supplied and used, but credit is not available to the user, please advise. The issue is basically I am a QRMP dealer, I am a quarterly return filer, and you are a monthly dealer. So I will file my GSTR1 at the end of the quarter. So how will you claim the credits? For this, the government has brought in the concept of IFF, invoice furnishing facility. So if I want to pass on the credits, then I will use IFF. Or if you want me to pass on the credit, you will say I will make the payment only when you discharge, you file these amounts in IFF. So basically to bridge the gap of quarterly and monthly return filers, the government has introduced the concept of invoice furnishing facility, and that has to be used so that we can file the returns appropriately and the credits can be passed on a monthly basis. It was already replied by Shrikantji also. Then we have an issue whether we can take credit of GST TDS. This credit will reflect in GSTR 2B. Sir, TDS and TCS deducted under GST are amounts of cash ledger and not credit ledger. TDS and TCS deducted in GST are amounts pertaining to cash ledgers. They are not in the nature of credits. Credits is when you pay the taxes, whether you pay it directly to the government, that is reverse charge, or you pay it to the supplier. But when any amount is deducted or collected from you, TDS is deducted from your amount. Collection is collected over and above what you were required to do. So that amount is taken from my pocket directly from my amount. So that is reflected in your cash ledger. So there is no need for those amounts to be reflected in GST at 2B. The simple answer is those are not credit ledger amount, those are goods. Another issue is in case of a manufacturer selling a footwear at the price of 999 to shopkeeper with MRP of 600, what rate will apply? Sir, the government has already clarified the concept of 1,000 rupees. Below 1,000 now it is 12%, above 1,000 it is 18%. So we have to see the sale value. Ignore the what is the MRP, what is the pre-discount, what is the post. What is the final amount that you are collecting from the customer? If it is above 1,000 rupees, 18%. If it is below 1,000 rupees, the tax rate will be 12%. So there is no confusion. It is already clear. You don't have to think of the MRPs or the pre-discount or post-discount. Where what eventually you are taking from the client, that is important. Mr. J. Thakkar has asked, sir, then what about the GST credit with regards income tax if Supreme Court disallowed in future? Sir, this issue is basically when I was in a face-to-face meeting, this was deliberated in a very length. I said, you claim the credits which are being disputed. Eventually, it will be in your favor or against your favor. The issue arises when after 2 years, 3 years, the issue is decided against you, and now you have to reverse the credit. Now, whether it will qualify as a prior period expense and disallowed under income tax or not. So to this, I was actually enlightened by a senior that this will not qualify as prior period expense. They said that you have claimed a credit based on certain set of documentation and certain set of understanding of the law. It is not an undue claim. You have claimed it based on some logics, some case laws. You were fighting for that credits, and eventually it was decided against you. So when it was decided against you, that amount instead of asset became a liability, that became an expense. Not before that. Before that, it was an income, or that was an asset. Only when it became against you, it was decided against you, it became an expense. So it will never qualify as a prior period expense. So there will be no disallowance under the Income Tax Act. Again, sir, these are not my thoughts. It was the seniors who shared me that this is the way we have to understand prior period. Another issue by Mr. Shrikant ji is, if ITC is availed in GSTR 3B on safari retreats on works contract, then the department has issued a letter stating it is ineligible credit and asking client for reversal of the same. What should be done in this case? How to reply this letter? And if SCN is issued, can we take the proper officer to keep the SCN in abeyance till the outcome of please guide? The basic issue in this query is that I have taken a disputed credit, and the department has also identified that this is the credit you have taken. Now they are asking me to reverse the credit. So since I have already decided that I will take this credit and I will fight for it, I will try to convince the department to linger it on. I will try to keep them in abeyance. Sir, Abhi, you have time to issue the show cause notice. Please wait for it. Please wait for the outcome of the Supreme Court. It is already prejudice. But the officers are not bound by my letters and my authorities. They can definitely proceed. They can definitely proceed with adding, making an addition, making the disallowance of credit and issuing a proper order. Then what will I do? Nothing to worry. You have credit lying in your account. You have to file an appeal. Use the credits to pre-deposit the 10% amount. When I have to file, I have file an appeal. I have to pay 10% of the disputed amount. So I have never claimed the credits. So that means my credits are already reflected in my credit ledger. I will pay 10% from that amount and file an appeal. Appeal is also against me. The department is very aggressive to collect the taxes. I will file an appeal before the tribunal. Again, I will use the amount lying in my credit ledger an additional 10%. For appeal, the pre-deposit is 10%. For tribunal, the pre-deposit is 20%. I will pre-deposit through my credit ledger and I will fight. Then for High Court and Supreme Court, there is no additional requirement of pre-deposit. So in simple words, you will have to fight. There is no way that you can get out of this mess. I'm calling it as a mess, but definitely, if you want to add value, you will have to pass through everything. You cannot expect that the things will be given to you in a platter and you will just have it and get the credit. Only very few professionals will actually decide to implement this in their practice, that we are taking these credits. And so it will not be an easy task. We already have cases wherein the credits are running into crores and we are fighting for it and we don't have any other option. We asked our client whether you are willing to take the dispute. The department was very aggressive. But when we said that, so you issue the show cause notice, you issue the order, we are fighting it till Supreme Court. They realize that yes, if the taxpayer gives you the confidence that you are ready to fight till Supreme Court, your aura changes before the authorities. Same was our case. So we have decided that we will not stop before Supreme Court. Whatever pressure they might build up on us, we are not accepting that we are reversing it. We are not even utilizing it. So again, sir, it is, you have to see how confident your client is. Accordingly, you will have to move ahead. Then there is a question by Sanjay Damodia ji. Your views on Supreme Court recent judgment on big refund case of Airtel, whether through this judgment indirectly credit of ITC restricted for claiming within the due date of GSTR 3B, that is, sir, obviously, the Airtel judgment, GSTR 3B was a return form. Gujarat High Court gave a judgment in which they said that GSTR 3B is not a return. The department went back and amended the law retrospectively and brought in the amendment that GSTR 3B is the return form. And in Airtel case also, the Supreme Court said that GSTR 3B is a return. And definitely, if you have to claim the credits, you had so much time to claim the credits. So first of all, you need to understand the basic of that Airtel case. Airtel filed a return, they missed some credit. They filed a GSTR 3B and they forgot to claim some credits. So they had the option to claim the credits in the succeeding return till a particular September, whatever the period was. They did not claim in the succeeding period. They went before the Delhi High Court and said that there is no provision to amend the return, revise the return. How can we claim the credits? So you can claim the credits in the succeeding return. So to my understanding, the judgment was appropriate, but definitely when we lose or it is a tax favorable judgment, department favorable judgment, we have something that no, it could have been better. But to my understanding, GSTR 3B is the form. The cutoff of September, whether it should be curtailed or not, again, sir, it will be disputed again. It is not the end of the discussion and it is just the beginning. We will have a constitution bench sitting on it maybe 5 years down the line to discuss whether 16(4) is also valid or not. Whether claim of my right can be restricted by law or it cannot be restricted. We have judgment in both sides. We have judgment that we cannot give you a relaxation which is time limit, which is there is no time limit cap to it. We have judgment where it is a concession and it has to be capped by a time. So there will be judgment both the ways and we will have to see what is the final date. As of now, again, I will advise whenever you have any conflict, claim the credits, but don't utilize. This is the best case scenario. Don't utilize, fight it for it in the future and see what the future has in for us. Next question is your views on cutoff date of credit reflected in GSTR 2B since portal disallows such credit. Sir, portal does not disallow. It automatically shows that these are disallowed. Those are auto-populated figure and you have to show with your facts of the case that we have claimed it well in the time. And if you want to fight, we are ready to fight. The only thing that we professionals are missing is the courage to fight with the departmental officials. Sir, under GST, it is very easy to fight with the department. The only thing is just to forget that you are sitting in front of a God. They will pretend to be God. The officers in the GST department, especially in the investigation team, they think that they are gods. Once you forget that those are gods and you are well equipped with the provisions of law, you know, worst case scenario, what will happen? You will have to fight for an appeal. Sometimes what I feel is that, see, I am not a very big expert. What I feel is, if I will lose my case at the first level, what will happen? I will go to appeal. I will lose over there. I will go to tribunal. After tribunal, I will hire the best person in the team, in the profession. He will go to the Supreme Court. But once you are yourself willing and you are confident that this particular aspect is correct, तो आप 2 बारी हारोगे, कोई तो आपसे अच्छा बैठा है, वो जीत जाएगा आपके लिए. तो be confident. If you cannot do, there is a senior, there is a professional who will get it done. There might be a situation wherein I feel the tribunal is not my cup of tea. Sir, no issues. There are many professionals who are there, and these issues wherein you are fighting for the benefit of large fraternity, definitely many senior professionals will come to you and they will not charge anything. They will do it for the sake of the fraternity and for the sake of the profession. So forget this, fight. Once you start fighting, you will feel that things are very easy and it is not what we used to perceive. What is the GST rate for contractor carrying out work of NHAI? Sir, if the contract is for construction of road, it is 12%. There is no dispute in that. There is no change in tax rate. Another issue here, RCM is paid during the year. So what is to be done? How much is exempt in transporter per day? RCM not paid. I'm coming to the simple issue first. When is the credit of RCM eligible to me? Assuming for 17, 18, 18, 19, 19, 20, I was required to pay reverse charge on a particular amount, which I have never paid. January 2022, department was auditing my book. They identified this amount and they said that you are liable to pay, say, X rupees for the 3 years, but you are not eligible to claim the credit. Just ask them, sir, please read Rule 36 with us. Rule 36 categorically says that the credit of reverse charge will be available. It is not verbatim what I am saying, so you will have to read it. It is Rule Section 36(1)(f), the specific self-invoice. The credit of self-invoice is eligible to the taxpayer only after payment of taxes. If I have to claim any reverse charge credit, then there has to be a tax invoice, and that tax return on that tax invoice must also be paid. That is, first I pay the taxes to the government and then I claim the credit. It can be simultaneously in the same month. I have paid and I have claimed the credit, but tax payment is mandatory. So if I have not paid the tax payment in 17, 18, 18, 19, 19, 20, my credit never originated, it never got a life. When a credit never got a life, can I say it has already died? It will come to life only after payment. I am paying those amount in January 2022. How can you say it has already expired or deceased? It has lapsed in, say, September 2020 or September 19 or September 18. It is getting life in January 2022. I am claiming it when it is live. How can you say it is time barred? And as regard exemption to transporter, there are two categories. One is 750 and 1500 rupees. So 1500 rupees is for the entire truck. If the entire transportation is used for, then it is 1500 rupees. Otherwise, it is 750 rupees per consignment. You said in the end of the session, you will say process when we are claiming last year reverse credit now at the time of payment. Said in the Vandana ji, please clarify your query. I am unable to understand. At 12:28 p.m. there is some query. Please reply, elaborate it so that I can take it. Another issue is by Mr. Ravindra. If vendor raised tax invoice and submitted for payment, but later in 2A it appears to be cancelled, so payment should be on hold till it is restored in 2A. So that is a practical issue. You are a supplier, I am a recipient. You are a supplier, I am a recipient. Whether I pay you after it is reflected in GSTR 2B, before it is reflected in GSTR 2B, it is decision between two of us. It is a mutual decision. Definitely, you can always say that I will be keeping on hold certain amount till the time you discharge of those liabilities. And it is cancelled, then I would advise not to play with, not to deal with that particular supplier, because if he has reflected in 2A so that you can claim the credit and later on he has cancelled, So definitely you cannot trust that taxpayer, that supplier, and in long term you have to avoid dealing with that particular kind of a taxpayer. Sanjay Dharmodia ji, your views on RCM on shipping, freight, import of goods, judgment pending before Supreme Court. So just for everyone, I am summarizing the issue. I am an importer. I have purchased goods from USA and those goods are coming to India. And now there could be two possibilities, rather three possibilities. The first possibility, I have asked the supplier in USA to send it directly to the customs port, that is directly to one of the customs port in India. All the freights, everything is covered in my transaction value, that is my purchase value. I am not required to freight independently. This is the issue which is being litigated. I will come to this issue at the last. The second issue is I asked the supplier in USA to prepare the goods, keep it at his factory. I engaged a shipping line or an airline, a foreign airline or a foreign shipping line. I asked him to visit the premises of the USA supplier, collect the goods and ship it me to one of the customs port of India. Now, in this case, there is no ambiguity. I am required to pay reverse charge on the freight services that I am availing. So this issue is not under dispute. Many a time people feel even this issue is disputed. No, sir, this issue is not disputed. There is no purchase of goods in this case. You are purchasing freight services from a foreign airline or a shipping line. Goods are destined to India, so definitely you are required to pay the taxes. Third case is you have engaged an Indian shipping line or an Indian airline, then they will charge you taxes directly. They will collect the goods from there, bring it to India and collect taxes from you. That will be under forward charge. So no conflict in that also. But in the first case, the issue is that he is supplying goods which also include value of insurance and freight during the transportation. So department says that you are required to pay taxes on the insurance and freight amount. So what should be the scenario? Sir, to my understanding, taxpayers are not required to pay RCM, but practically we are asking our clients to pay, because when we pay, we get the credit and it is easy for us to get out of the conflict. Why invite litigation? But there are many cases wherein we have exempted commodities. So paying reverse charge on freight will become add-on to my cost. So again, my views are very simple. The taxpayer is not required to pay taxes on the freight amount in case it is a composite contract, whether it is segregated or not segregated. The concept of composite supply holds good in this particular case, and I am not required to pay the taxes. There was another plea that was taken during the arguments was that there is double taxation. The freight and insurance amount is charged under custom duty also, and now you are asking me to discharge GST also. So the High Court has categorically said that there is no double taxation. It is taxation of one transaction in two different tax. There is taxability of one transaction in two different tax. Like in the earlier regime, we have transaction of sale of goods by a manufacturer. So earlier it was liable to excise, then on the same amount sales tax was payable. Similarly, in this amount, once it is custom duty and the other thing is GST. Double taxation is when you charge tax on the same amount under the same act. So this plea was rejected by the Gujarat High Court, but overall they have accepted that yes, there should not be any tax liability in this. And even I stand my view with that particular aspect. Sita Ramji has asked RCM pertaining to previous year. Sir, Rule 36 categorically states that the credit gets live when it is actually paid, when taxes are paid. So जब मैं tax pay कर रहा हूँ उससे पहले वो मर नहीं सकता. It will get live only after payment of taxes. Another issue by Mr. Hussain ji is department is issuing notice based in GST to be the ITC, but the amount is different, maybe due to different GST rate or incorrect punching of GST amount. Can be claimed on the basis of correct invoice and ask the inventor to commend it. The basic issue in this query is that I have purchased goods worth rupees 1 lakh rupees. Due to some mistake, the supplier has reported that 1 lakh rupees instead of 18% at 12%, or instead of 1 lakh rupees to 10,000 rupees. In all these cases, you can definitely take a plea that there is a clerical mistake by the supplier and he has already rectified that mistake in the subsequent month, so I am eligible to claim the credit. Plus also that during my practical experience with the department, if on a cumulative basis, say 3 months, 6 months, 9 months, 12 months, if you prove them that the entire credit claimed by you is reflected in GST 2A, they are not very rigid that it should match on month-to-month basis. So if on a period, say 3 months, 6 months basis, you justify them, the credits are sufficiently claimed and they are sufficiently reflected, then there is no issue with the department. However, because it is dependent on officer to officer, so we will have to see how the officer is reacting to this particular aspect. Another question is by Mr. Ravindraji. If contractor awarded works, their tender is buying inputs in the name of other group companies and actions available as suppressing ITC. Ravindraji, your question per se, what I have understood is that I have received the contract, but I am purchasing the goods in the name of other entities. So definitely it is a malpractice that is going on and it will be disputed. The credits will, or in the goods purchased by my sister concern will always be disputed. And if there is anything else you wish to add, please add it at the end so that I can reply to that. Another query is that if I have paid wrong taxes in a particular month and I have already paid the interest, but now with this clarification coming into picture, can I claim the refund of interest amount? Definitely, sir. In case you have paid interest, which is now not required after the latest clarification by the council, you can apply for the refund. And to my understanding, those refunds should also be granted easily. Please explain further about government authority and government entity in respect of works contract. Sir, government authority and government entity are a very big term, and I cannot say that this is the precise conclusion. That is why I referred that those who want to understand what exactly is central government, state government, local authority, government entity, and government authority, they will have to go to the definitions of each and every, first of all, definition of these 5 items. Then they have to understand the category with which they are dealing. And it is not a issue which can be deliberated or completed or closed in a Zoom meeting without having the actual definitions in front of me. Even I cannot remember what exactly is local authority, government authority, local authority, and government entity. I will have to go back and see the definitions and then again interpret them. Another query is by Mr. Mukesh Narang. Insurance company input credit can be claimed when the company recovers as CTC from employee salary. What are the implications of URD purchases of goods services for RCM? Sir, now there is no concept of reverse charge on unregistered person. There is no concept of reverse charge on purchases from unregistered person. It is applicable only in case of construction contracts. Apart from construction contracts, real estate project, there is no concept of reverse charge from unregistered person. So that is closed. And the second issue that is raised by you is, assuming I am a company, I have taken an insurance for my employees. It could be a medical insurance, term insurance, or any other insurance. Now I am recovering that amount from the employees also. So whether I am eligible to claim the credit of insurance amount. Sir, in this, I have a view which may not be acceptable to you, but definitely I will share it. If you are giving those services to your employees, whether you are charging or you are not charging anything, it is a deemed supply under the provisions of GST Act, and you are required to pay taxes on the supply. So you will have to pay taxes on the supply. You will notionally charge some amount to the employees, recover taxes, and because now you are paying taxes on that amount, input tax credit is eligible to you. Or you could say that it is a pure agency transaction. All the employees came to me. They said that please get an insurance done through the company so that it is beneficial to everyone. Everyone will contribute each and every amount and pay to the insurance company. Now, because each and everyone is contributing and the company is neither the supplier nor the recipient, how can you claim the credit? So either you pay the output tax and claim the credit, or you are a pure agent and no credit is eligible. And even under section 17(5), it categorically states that the credit of insurance is not eligible in the normal case scenario. Next issue is just a minute. Vandana ji has repeated her query. Input tax credit will not be restricted to appearing in GSTR 2B, but there will be a case when you reverse credit due to non-payment and now you made it 20. You said, I will explain. That I have already explained, ma'am, that I am eligible to claim the credit. Even though the law restrict or the portal will or the form will say that you are claiming beyond GSTR 2B, but definitely you can claim. And now I also said that the press release which says that credit availed but not utilized, no interest will be payable. So I have to take the benefit of everything. So my basic objective was that even though 16(2) AA and rule 36(4), I cannot go beyond 2B figure. But the form cannot be prepared in such a manner that it will restrict the figures to be edited. I can still go beyond GSTR 2B, and there could be many cases where I can go beyond. It could be rule 37, it could be stock in transit, and it could be GST credits which I was disputing, which I was, for example, safari retreats. I have not claimed in the previous period. Now I am claiming because I have got this enlightenment that if I claim but don't utilize, I can still fight for those credits. So it was only related to that, and there was nothing apart from that. Well, I have already taken up during the discussion what I had to take. Another query is if the employee is leaving the organization and he has to pay any bond money to the company, whether there is any relaxation or restriction. No, sir, there is no relaxation or restriction. You are still required to pay the amount to the GST is still payable on that particular amount. Another query is by Mr. Mansoor, whether GSTR 10 not filed within the stipulated period, what are the consequences? Sir, if GSTR 10 is not filed, then definitely there is a non-compliance. Even in our cases, we have observed that my staff has missed in 1 or 2 cases. So instead of paying the penalties, we have decided to keep mum and let the department come back to us. It is already a suspended supplier. There were no supplies. So we have decided not to intervene in that particular thing and not step forward ourselves to get into the mess. And I think it will automatically go out of the system. And even if it does not go out of the system, the other thing that is very clear under GST is those who are defaulting will get an opportunity to come clear. So there will be a time when again GSTR 10 from 1st of July 2017 till that particular date will be exempted without any late fees or something like that. So that amnesty scheme will be there and we can use that amnesty scheme. As of now, I will not advise you to proceed or do anything more than that. Sir, I have tried to take up all the queries. If any is left, then they can unmute themselves and we can see.
So last 2-3 queries, if somebody would like to have, so they can unmute themselves. So I think there is no query. So it was a hello. Yeah. Yes, Sanjay ji.
Good afternoon, sir.
Shweta.
Yeah, I have a query. Just a few minutes back, you told that regarding RCM liability.
Yes, ma'am.
If I have not paid, suppose I can avail the credit when I have paid the liability.
Yes, ma'am.
In one scenario where we have paid RCM liability, but we have not availed it,
Yes, ma'am.
and we realized it now. Like we had paid in 1920 and we realized it in 2021, for an example. Then can we avail it? Like, can we take the credit?
Theoretically, then you have that credit is now lapsed. But again, I would suggest that you take, if you can claim the credits and don't utilize them,
Okay.
then you can fight for those credits. But make sure that those should not be utilized. System will automatically utilize it. Especially if it is IGST, the system will automatically take it for the adjustment of output liability. So one has to be very cautious whenever I use the word do not claim the credit, it should mean do not use the credit.
Okay, thank you.
तरुण जी, अभी
Yes.
क्या हो रहा है, कई वेंडर लोग अभी भी लेट से फाइल कर रहे हैं GSTR 1 और फिर हमारे वो उधर रिफ्लेक्ट नहीं होता है वो 2A में या 2B में जैसे भी हो गया है। तो सितंबर तक में अब अगर हम लास्ट ईयर का क्रेडिट नहीं ले पाएंगे तो बहुत सारे लोगों को अभी फाइलिंग नहीं करते हैं, वो सितंबर के बाद ही करते हैं। तो वो हमारे सब लैप्स हो जाएंगे या हम लोग क्लेम कर लें और फिर ये क्या डिफॉल्ट माना जाएगा और पेनल्टी
वही तो सर ये हमने डिस्कस किया था कि हम सितंबर 2022 के अंदर जितने भी 20-21 के 21-22 के क्रेडिट रह जाएंगे
जी
वो क्लेम कर लेंगे लेकिन यूटिलाइज नहीं करेंगे। मतलब उतना क्रेडिट हमेशा छोड़ के चलेंगे, बाकी को कैश से पे करेंगे। और जब फाइनली इस पे कंक्लूजन आएगा कि क्या 16(2) AA 36(4) को वैलिड लॉ माना जा रहा है नहीं जा रहा है, सुप्रीम कोर्ट जब तक सर अब इस पे अपनी जजमेंट नहीं देता, मेरा एडवाइस सिर्फ ये है कि हम अपने क्रेडिट्स को क्लेम करके छोड़ दें, यूटिलाइज ना करें, क्लेम कर लें, क्रेडिट लेजर में छोड़ दें, बाकी सारी पेमेंट्स को कैश से करते रहें। एंड वंस द सुप्रीम कोर्ट डिसाइड इट विल बी एप्लीकेबल फॉर एवरीवन, then we will see what has to be done.
नहीं, अब तो एक्ट में आ गया ना सर, अब तो पिटीशन भी डालेंगे तो सब, अब तो सुप्रीम कोर्ट भी बोलेगा कि नाउ
एक्ट में तो अभी आया ना।
हाँ।
जब वैट के टाइम में जब सुप्रीम कोर्ट ने अराइज इंडिया की जजमेंट दी थी तो एक्ट में ही था। तो
अच्छा, तो अभी भी चांस है।
हाँ सर, बहुत अच्छा चांस है। अराइज इंडिया की जजमेंट जो सुप्रीम कोर्ट की जजमेंट है वो तब था जब सब्सटेंसिव लॉ के अंदर प्रोविजन था, एक्ट से पावर मिली थी, तो भी सुप्रीम कोर्ट ने बोला आप रिसिपिएंट से सप्लायर की कंप्लायंस एक्सपेक्ट नहीं कर सकते।
जी सर जी। अच्छा, अब ये हर महीने चेकिंग करना पड़ेगा सर अब।
हेलो सर,
फरवरी से। ठीक, थैंक यू वेरी मच।
Tarun sir, taking forward this question, see they came with the amnesty, say last year also some relaxation. So
Yes,
somebody filed a return, say last year of the 2017 they allowed. For me, the credit was denied because the other person has never filed the return. Can I go back and claim all that credits? Because you say by time limitation of law, September 18 you restricted. That was though extended to 31st March 19 at that time. And then you say September 20, I have to forget. But you other way allow other person to upload their return today also, giving amnesty scheme. So why the person who is genuinely paying and not allowed credit, they should also make amendment or give that much credit to that person. Matlab, that should be there, no? Something like that. That's my question.
The proposal that you are saying, Vandana ma'am, has already been sent across numerous times to the authorities, that you are always giving an opportunity to the defaulters, those who have not filed the return. And I'm again saying, one of the query was whether GSTR 10 is not filed. I wait for it. You will get an opportunity. GST law will definitely give an opportunity to the defaulter. But where there is a genuine person who is being hampered through entire process, the department is not very inclined. But hopefully, I'm not saying definitely, hopefully we may see an amendment or a relaxation for this particular aspect. But the important thing is keeping those credits live. I never say to disallow those credits, not to claim those credits. I always suggest my clients keep those credits live. If you are keeping those credits live, you have a better case than the persons who have not claimed the credit. Yes, I always try to balance the law. I don't want to avoid the litigation, but I also have to see the cost. In many cases, we have taken the call, we will never deposit interest on credits. So for 3 years, I was being asked by my clients, in many cases, the interest amount used to run into crores. They used to say it will be a very big amount if the departments come back to us after 5 years, we will not be able to pay it. And now they are saying that it was a very good decision we have taken 2 years back. So you will have to take risk. Without risk, you cannot go ahead. So you should claim the credits. Don't utilize them. That is the most important thing. System will automatically prompt to utilize those credits.
आपको सुनना सुनना आज सुना तो अभी स्ट्राइक हुआ ना कि हमने रिवर्स कराना नहीं था क्लाइंट को. पहले क्या लॉ में तो क्लैरिटी थी नहीं, उन्होंने तो बोला था साइट पे नहीं
मैम,
दिखे
अगर
तो
अभी
दोनों
भी
payment
आपने जो वर्ड यूज किया है, अगर आपने रिवर्स किया है,
हाँ.
क्लेम करके रिवर्स किया है, आप दोबारा से रिक्लेम कर लीजिए.
Oh, that's fantastic.
अगर आपने क्लेम नहीं किया, उसकी बात नहीं करो.
हाँ.
अगेन आई एम मार्किंग माई वर्ड. मैंने 100 रुपीज क्लेम किया,
Understood.
उसमें से 20 रुपीज रिवर्स कर दिया कि वो रिफ्लेक्ट नहीं कर रहा था.
Disallowance करके नीचे लिख दिया था तो then now I can get it back because
Yes, you can
from-
again, you can avail से. उस समय तो आप बोल दो वो X का रिवर्सल था, Y का रिवर्सल था, 180 डेज का रिवर्सल था, जो भी था.
Correct. Got it. Great.
Last question, if any. So,
Hello.
yeah, Mr. Pal.
Sir, in regards to group insurance, which generally company pays for their employees and their families, हम उसका credit तो लेते नहीं है, but whether this group insurance amount will be termed as a deemed supply by
So
company
it
to
is
the
a
employee?
very big question and I am a very small person to answer this. Cross charge is something which is beyond our understanding. We have tried to understand and implement in, for example, head office doing certain services, branch transfer we understand, but there are certain entries which can never be understood. And similarly is the case of this staff insurance or the group insurance that we take. What we do in our practice is very simple. We pay the output tax, we claim the credit, matter closed. You cannot come back to us. We add 10% value to it. Abhi we are disallowing 100% amount. In that case, we just have to bear 10% of the amount. Na? We will bear that 10%. But at least we are out of the ambiguity. We are selling insurance to our employee at market value plus 10%. What is the wrong that I have done? You are not claiming the credit, but you are taking a risk that you will be, the government may ask you to pay the taxes. In our cases, what we say is it is a supply. This is what we practice. Again, sir, you may differ, but I try to avoid litigation wherever possible. And if I am taking a litigation, then it should have a good win and lose situation, and the amount should also be decent. So I pay the taxes on the output supply. I claim the credit. I am supplying insurance services to my client. There is no restriction in the law. So I have sold the insurance to my client. I am eligible to claim the credits. My overall impact is 10%. For you, it is 100%.
Okay. Thank you, sir.
Hello.
Yes. Last
I'm
question.
Mr. Sanjay. Mr. Tarun, I would like to have your views on the hotel stay credit out of state, where the place of registered place of business of supplier is in another state.
Sir, again, we will have to go back to the concept of GST. The GST was envisaged that it is a consumption-based taxation system. And since India is a country which is formed of many states, so every state had certain disputes while bringing in GST. So the government had to make sure that there would be certain items in which the state will not change and the consumption will be supreme. So we have restaurant services, irrespective of the fact you are from Delhi, Gurgaon, Mumbai, or XYZ, any other place. If you are not in that sense and you are eating in a second state, you will not get the credit. Same is it. You are enjoying your facilities in state Maharashtra. So as a Delhi registered person, I cannot claim the credit. And now, sir, the issue arises whether it is correct or not, free flow of credit. Sir, there are many wrong things in everything. This is one of the wrongs in GST, wherein they said that there will be free flow of credit, and there is no free flow of credit. We have section 17(5), which is restricting the credit. And this is also that we will not allow the credits of to a Delhi person who is staying in Maharashtra or UP. And this is backed by law also. If you read the definition of SGST, I'm saying SGST law, read the definition of Maharashtra SGST. What is MGST? MSGST. It will say taxes charged under the state of Maharashtra States and Goods and Services Act. And when I read the law of Delhi SGST, it will say taxes charged under Delhi SGST Act. So when I'm reading Delhi SGST Act, it says credit of SGST is available. But what is that SGST? Charge under Delhi Goods and Service Act. Tax charged by Maharashtra, UP, Tamil Nadu, Karnataka, it is not creditable in the SGST Act also. Again, sir, whether it is correct or not, it is not my thought. They have, the issue is deliberated not once, not twice. In the Indirect Tax Committee of Institute also, this issue has been deliberated n number of times, and the representations have been sent n number of times. But the department or the lawmakers are very rigid that they will not change this particular provision. They say the consumption is in state X, you cannot get credit in state Y. Whatever reasoning you give, they don't accept it.
Any chance of success at the higher forum if the amount is substantial?
No, sir. I don't foresee this. Well, definitely I can be wrong, and I wish I should be wrong. But as of now, the concept on this seems to be very difficult. The credit on hotel industry being traveling from one state to another seems very, very, very difficult.
Thank you. Thank you, Mr. Arora.
Thank you.
Great, sir. It was an excellent session, Mr. Arora, and you had clarified the concept of GST with the recent amendments with our members. Now I request our core group member, CA Thakkar, and our past convener, CA Sahaji, to give a formal vote of thanks to the speaker. Over to you, Jayesh Sahaji.
Thank you, convener. Friends, all of you agree that GST is a dynamic law as observed by Tarunji in the beginning of the session. Under GST, only constant thing is a change. And this law requires some special input and briefing by some learned speaker like Tarunji. All of you agree that Tarunji has masterly analyzed the amendment which are coming applicable from the 1st of January. And he has given a lot of practical tips. He has given the answers to the lot of queries raised by the members. All of us has immensely benefited from his talk. On behalf of the JB Nagar Study Circle and all the members, I propose very hearty vote of thanks to Tarunji, and all of us has immensely benefited Tarunji. We look forward for future discussion from you like this, with this. Thanks a lot, and thanks a lot on behalf of all of us. Thank you.
Thank you, sir, for sparing your time on this Sunday morning in the first Sunday of the year. So I propose a very warm year for all of us. And now we are closing the session. Thanks a lot.
Thank you.
Thank you.